Hello there, this is James and you're watching Tixee Live. Today's program, we've got a fair bit of stuff to cover, certainly some events which happened during the Asian session, and we'll also do at the same time a recap about this week and what a week it's been. I don't know about you, I'm half exhausted by this week, but at the same time, I'm half excited as well. But before we get on with the program, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your due diligence. I'm just going to say that word, diligence. And of course, know the risks at hand before entering any training. With that out of the way, let's get started. So, the main news today. Well, the main news is we had a bit of a development during the Asian session when I was speaking, obviously, but basically China's given the market a bit of a boost, okay, and let's face it, after yesterday the market needed a bit of a boost. What China did was the China banks have actually reduced the bank rate or the base rate by 0.15 basis points. This is a record apparently. This is on their 5-year mortgage rate, not their prime loan rate. However, this was an unexpected move in many ways. People did expect they might do some sort of cut, but not by 0.15. And so what this is given the market a bit of a boost, a bit of confidence that obviously the world's second economy, which has stumbled over the last couple of weeks, months even, and certainly they've been in lockdown as well. And they have another outbreak of COVID. This is giving it a little bit of an adrenaline boost into the market, thinking that the second biggest economy was going to start trying to grow again, inject itself with some life, so to speak. So this has had a positive impact on the global markets in general. In fact, as we currently are talking, the FTSE is up by 1.29%. The DAX is up 1.81%, and the Eurostoxx 50 is up 1.38%. Don't forget the carnage we experienced yesterday. That's quite something else. As well as that, it is expected on the back of this, though obviously, we've got how many minutes now? 27 minutes before the US opens. It is sort of like anticipated that the US stocks are expected to open marginally higher in the US session. So again, there's optimism dripping into the US market slightly as well. However, a lot of analysts are still saying that the S&P potentially is still on course to close this week out below the 4,000 point mark. It's the first time that has happened, or that has done that since March 2021. Okay, so it is like optimism and a bit of a boost, but also at the same time a bit of a edge on the side of caution type boost. So maybe it's like a short-term bit of confidence. But anyway, we'll see. But let's have a quick look at some of the instruments. Let's have a quick look at the FTSE 100. Okay, so obviously yesterday, as you were following me, it was carnage. It did start to recover during the US session, and today it has been on more of an upward direction, having a bit of a sell-off in the last hour or so. But again, there is a bit more of a boost on that. We have a quick look at the DAX as well. Again, DAX, same picture, a little bit more optimism, though we are seeing a little bit of a sell-off at the moment, not a dramatic sell-off. After yesterday's bloodbath, there is obviously a little bit more optimism on that. If we have a look at the S&P 500, see what they're saying. Again, like I said, analysts are saying it still has a chance of closing under 4,000 points by this end of this week, but it closes this session for the first time since March 2021. So obviously it had a really bad day a couple of days ago, as we know, we covered that. Again, you can see it having a bit more of a boost at the moment. Obviously, US main trading session is opening in 25 minutes, so we should have a look at it then. But it's having a bit of a boost, certainly after yesterday. As you can see, yesterday was, whoa, Scary. Okay, so anyway, that's a little bit about the indices and about how the market's feeling. And yeah, thank you, China, for giving us a teeny weeny bit of a boost at the moment. So what else has happened today, or what else is new? Well, we had the UK consumer confidence today, and it's the lowest on record. The lowest on record since they have been registering this survey. So it's the lowest on record. It's so low, it's even lower than the 2008, when the 2008 credit crisis was starting. So it's extremely low. So yeah, not necessarily a very good sign that the UK public are feeling particularly good. However, at the same time, we had UK retail sales announced, and it was actually 1.4% versus minus 0.2% expected. So that was a bit of a surprise. So we have lower consumer confidence, but retail sales are as higher than anticipated. However, it's still pretty much still, even though it was better, it's still, if you look at the record over the last couple of retail sales numbers, it's still on a slightly downward trend. But surprisingly, the analysts are saying why the UK retail sales were slightly better, and this is so British, and I can say this because I'm British. It was due to alcohol and tobacco sales. Very British. So yes, that's what gave that number slightly better than anticipated. So let's have a quick look at the sterling, because we've been watching that a lot this week, because there's a lot of stuff happening with the sterling. So we've been watching that again after yesterday. It is trying to recover. We're still a little bit way off from that target, that crucial resistance level of 1.2549. Remember, that's the level we've been watching. That was the level it broke before it went on a massive downtrend after the Bank of England increased interest rates over a week ago. Nearly 2 weeks now, I think it is. So we're still below that level, slightly boosted today again by that China data and by the retail sales, but it sort of seems to be ignoring that consumer confidence statistic there. But yeah, we are still a little bit below that area of interest of 1.25490. We are now above the 100-day moving average, the 50 and the 200. So indicating that maybe the tide is turning slightly for the cable. But to be fair, until we can clearly break that 12549 level, there is still a huge potential for the downside. So we still got that level to watch. Okie doke. So that's the cable. What else is happening, James? Oil. We talked a little bit. Well, I mentioned oil yesterday because it had dropped a bit. And obviously, we're all hoping it to drop because hopefully then our petrol prices will go down. But oil is stuck between a rock and a hard place, okay? Because there is supply concerns, okay? OPEC is not meeting its commitments. Plus, there's the demand issue from China. Now, like we said earlier on, China is trying to boost its own economy and helping the world's economy by lowering obviously the 5-year mortgage rate, which has helped today. But they're also opening up, coming out of their lockdown. So it's hope that China's demand is going to go up. So, supply, demand, supply. So there is a sort of increase in, or hope there should be demand. However, there is concern, of course, of economic slowdown. So then demand may wail. So it's stuck really between, not quite sure what it wants to do at the moment. So if we have a quick look at oil, I'll bring oil up for you. There we go. Here's oil. Here we go. This is on a 4-hour. As you can see, obviously we had a lovely little uptrend there. It dropped off, like I said, because of those concerns of economic slowdown and demand waning. And now at the moment, certainly over the last, this is a 4-hour chart. If you look at 1 hour, you can see it again. It is really sort of like stuck between a rock and a hard place. It's trading above the 200, but it's trading just below or round about the 100. So it is literally stuck between a rock and a hard place. So we might, if we get some economic data, damning economic data next week, and I'll talk about that later, we can start seeing fears leaving that demand may wade. At the same time, don't forget China is now interested in getting oil imports from Russia. Okay, don't forget Russia's been blocked because of the sanctions, because of the Ukraine war. But now China is going to do it. So again, we should have a look at that, see how that does supply and demand as well. So we should get more of that sometime next week. Okay, what else? Let's have a look. Oh, yes. Question on gold. Gold is recovered slightly, but for how long? What do I mean recovered? Well, on Monday, remember when I was talking doom and gloom? Gold actually hit a 4-month low of $1,787 an ounce. However, and remember, and then on the next couple of trading sessions, we had dollar strength, and I was going, this is not, safe haven. We've got the Swiss franc behaving like a safe haven, Japanese yen behaving like a safe haven, the dollar in some ways behaving like a safe haven, but gold wasn't. And then all of a sudden yesterday, gold started behaving like a safe haven. And let's have a quick look at gold, actually, because gold is, this is on a 30-minute, is now above, so we'll go on the 1 hour, look, sorry, 1 hour. Let's come out a bit. Okay, there we go. Gold is above that 130 level, which was trying to break. We were watching that throughout the week. However, it's still capped under that key level of 1,850 level. Okay, so now it is showing signs of being a safe haven again. Certainly yesterday, it showed signs of being a safe haven again. It recovered from the 4-month low on Monday. Okay, so it is sort of recovering, but for now, that's the level, the potential resistance. 1,850 is the key level we need to watch for it to really start gaining momentum. Current support, potential support, and level of interest, 1,834. So yes, it has recovered, but again, after obviously the performance of the last couple of trading sessions and the fact that it's only now sort of showing its signs of being a safe haven again, we need to see if that sort of status will continue. Okay, so I'm excited about gold. Obviously, people who know me know I'm a gold bug and things of that sort of nature. But before we go on to a recap for the week, let me quickly share something with you, which is just as exciting. Exciting stuff. That is a fantastic application. Certainly for those who are beginners, etc., and maybe don't have that much knowledge on the market, copy trading is an alternative for you to look at. Certainly if you don't have time to analyze the markets yourself and things like that, but don't forget, it's what tixeeLive is here for, to help you as well. So it's certainly a fantastic application. Very excited about it. So by all means, check it out. Okay, so moving on. What else? Oh, sorry, one other thing before I forget. I will be doing a tutorial and other videos on the application showing you how to use it, how it works, the benefits behind it, things like that. Forgot. I will be doing that very, very soon. So stay tuned for videos on that. Anyway, moving on. Yeah, so what a week this week has been. Full of twists, turns, ups, downs, you name it. Like I said at the very beginning, I'm half exhausted, half excited by this week. But if we recap, Monday, I was very doom and gloom. It's all about inflation, all about potential recession. So very doom and gloom. US strength throughout. US was king on Monday. Then Tuesday, of course, we had that hope, didn't we? We had that sudden bite of risk appetite in the market. And then what did we see? We saw, risk appetite, cable recovering, euro recovering. Stocks were performing quite well. So we had that little bit of strength and optimism in the market then. And that was down to JP Morgan sort of saying that we'd oversold on the riskier assets, overthinking the potential recession. So that's what happened on the Tuesday. Oh, and don't forget, we had Twitter. What this Twitter story was, Musk and his poop emoji to the CEO of Twitter. We had all that drama, and that's still going to be ongoing. I'm looking forward to how that develops. We had Twitter. And then we had at the end of Tuesday, didn't we say, or was it Wednesday? No, Tuesday. Then we said we had Powell. And I'm calling Jerome Powell, the Fed chair, the inflation terminator. He's absolutely committed to try and tackle inflation. And he did one of the most hawkish speeches I've ever heard at an event run by Wall Street Journal. And the impact of that was, again, guess what? Fear again. Yes, so we then had fear of recession and inflation again. In fact, on that day as well, the UK published this inflation at 9%. The highest in 40 years. So then we had slight doom and gloom again. And then Thursday, because of Target and Walmart, publishing their earnings, which was half of the previous quarter, we had fear again. Not just fear this time, a total sell-off of the market. A very, very, very bad, but not total sell-off the market. Of course, a very dramatic day where everything was in the red. And we had the US stocks single biggest drop off here since 2020. So, really big day on that. And it was about Target and Walmart. Today, a slight boost. Thank you, China, for giving us a slight boost and optimism and hopefully ending the week on a bit better note. But what a week it's been. Coming up next week, though, key events. Bank of England governor's speech. Bailey's going to be speaking, so we're going to be watching, see how hawkish he's going to be. US durable goods, EU PMI, and the big one, FOMC minutes and US gross domestic product. So keep an eye out for that. I may do some watch-alongs with that as well. So keep in line for that. So we've got a big week coming ahead of us next week. But one thing I'm going to be interested in, as well as all those events, obviously, but one thing I'm keeping an eye on is Costco. I'd be interested to see, because they got their earnings next week, I'd be interested to see if they go the way of Target and Walmart. Walmart. Yeah, said it. Because don't forget, when Walmart and Target released its earnings, over the 48 hours combined, they lost 65 billion of their value. Okay, and this is again due to obviously inflation, which we're all struggling from, including the corporations. And that's what started yesterday's dramatic drop, was because of concern of corporations suffering from inflation and actually showing the signs they are suffering from inflation. So it'll be interesting to see what Costco does and what the effect that has on the market. So that I'm extremely, extremely interested in to see where we go with that. So it's been a fun week. Thank you, every single one of you who's joined me. Don't forget, I'm always here to ask questions. So if you ever have any questions, please feel free to ask me questions while I'm live on air. If I know the answer, I will certainly answer it. Next week, Monday, we've got a European session. I'll be covering US session again, so twice next week. I will do watch-alongs, probably with the US GDP, and we'll do a commentary on the FOMC. So we've got a massive week next week. I'm really excited about it. I hope you are too. So don't forget to check it out and join me. And don't forget, I'm here if you have any questions anytime, which I can see there's no questions at the moment. So everybody's probably wanting to go and enjoy their weekend, which I don't blame them. On that note, if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube, if you like it, subscribe if you like. Maybe click the notification button if you want. And if you enjoyed this video or found it useful, give me one of those. It's my birthday today. It'd be like a nice little present for me. Anyway, on that note, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.